Hello, my name is Stephane Prigent and I am the CEO of Katch Investment Group. In this short video, I'm going to give you an introduction to our group and give you an overview of the asset class of private debt. Katch Investment Group is an asset management company that is 100% dedicated to the private debt. We have 15 employees and 3 partners, and we manage a little bit more than $100 million with 2 investment vehicles. We have a presence in 5 countries, in the UK, in London, where we manage the distribution of our funds. We have a presence in Sao Paulo, in Brazil, where we have an asset management company that is dedicated to buy local receivables. We are in Luxembourg with our CCAV, Katch Global Solutions. We have a presence in Panama, where we manage the research. And finally, we have an office in Switzerland, where we offer the service of CIO outsourcing. As I said before, we have 3 partners. Personally, I have more than 20 years of experience in asset management at BNP Paribas, Lehman Brothers, and State Street. Our CIO, Pascal Runner, has more than 15 years of experience in asset management, mostly at Credit Suisse, but more recently he was the CIO of a family office of about 1 billion assets under management. And finally, Laurent Jeanmar, that is based in London, has more than 20 years of experience, especially on selecting alternative funds, and more recently he was the CEO of an insurance company of about $2 billion. As we're getting into this late economic cycle, we can see that it's more and more difficult to get good performance with a diversified portfolio. As we saw in 2018, the equity market corrected by about 7%, fixed income went down about 3% in average, and finally the most sophisticated investors, the hedge funds that you can measure their performance with the HFRX index, also went down by 7%. So it was very difficult to have a good performance in 2018, and the only way to reduce the risk of such a portfolio is to add what we call non-correlated assets, what we call the alternative investment. When we talk about alternative investment, of course we talk about real estate, private equity, but also private debt. The private debt space for us is the asset that has the best profile the return risk. We talk about volatility of about 1 to 3%, with returns between 6 and 10% depending on the underlying strategies. After the last financial crisis of 2008, the regulators in the US and in Europe introduced some new rules to limit the risk of the banks. The most important rules were Basel III, also the Volcker rules, and as a result we can see that it's more and more complicated for traditional banks to lend to small and medium companies, especially when we talk about short duration loans, duration below 6 months. As a result, the mutual fund industry took over that business. We saw the creation of more than 200 mutual funds that are dedicated to private debt over the last 10 years. And it is our work at Katch Investment Group to select and identify the best funds in order to offer you the best exposure as possible to the liquid private debt space. Thank you for your attention.